A credit score ignores whether you are an honest person or a hard worker. Instead, it waits for you at the car dealership or the leasing office to decide if you are allowed to enter. Life is complicated. People lose jobs, survive medical crises, or spend their savings to care for a parent. The scoring system strips away that context. It translates those human struggles into cold mathematical signals: late payments, high balances, and defaults. Once the system locks you into that language, lenders and landlords treat the output as the objective truth. A difficult month from years ago sits in the room with you during an application, painting a picture of someone who is too dangerous to trust. This narrow risk assessment expands to fill your entire life. It forces you to carry a specialized financial calculation as a universal label of your personal worth. The architecture of this system runs on a frustrating loop. To build a credit history, you need to access credit. But to be approved for credit, you must already have a history. This flowchart outlines a strange paradox. A young adult or recent immigrant might spend years living entirely within their means, paying with cash and avoiding debt. But lacking data points, their file hits a dead end. To the machine, self-sufficiency looks like a risk. To become visible to the system, these people are forced to take on debt they do not actually need. They sign up for high-fee store cards and secured loans purely to create a paper trail for the algorithm. The system penalizes financial independence. To exist in the modern economy, you must prove your reliability by continuously interacting with debt. The rules of credit sound manageable on paper: pay on time and keep your balances low. Then the friction of a normal life schedule enters. A grocery trip on a low-limit card makes your utilizations tight, or a bill falls due exactly 3 days before payday. A missed payment triggers a compounding loop. Lower scores lead to higher interest, draining cash, making another missed payment likely. The algorithm also punishes safety nets. Putting car repairs on a card spikes your balance, lowering your score exactly when you need financial strength. The formula judges behavior within unequal conditions. A person with extra cash can set everything to autopay and keep utilization low without effort. A person living paycheck to paycheck watches and rewards the presence of a cash cushion. It measures the appearance of discipline, always easier to maintain when life is already stable. The fear of a hard inquiry discourages you from shopping for better terms. Every time you check your options, the system may penalize you, stripping away your leverage and benefiting the lender. If the databases make an error, reporting someone else's debt on your file, the burden falls on you to fix it. You spend weeks gathering documents and filing disputes while your housing and loan applications are put on hold. This forces you to manage your finances like a public relations firm. You time your payments, keep unused accounts open, and delay applications purely for algorithmic optics. Responsibility is replaced by a theatrical performance. You are no longer just living. You are trying to look attractive to an automated machine. The stakes are massive. These 3 digits dictate where you can live, how you move, and in some cases, whether you get the job. A low score introduces friction at every door, requiring higher deposits and more explanations. We have shifted the definition of trustworthiness. It is no longer about your character or honesty. It is strictly about your participation in a visible cycle of borrowing and repaying. Participation requires a surrender of privacy. Your financial life is compiled into a parallel version of yourself, a file that is constantly monitored, scored, and sold to institutions to dictate the terms of your life. Access to basic shelter, mobility, and stability now requires complete submission to a lifelong architecture of financial surveillance. 3 digits flatten a medical crisis or a job loss into a failing grade. Without context, the score becomes a label of character. Even those with good credit are caught in a state of constant anxiety. They become hyperprotective of the number, terrified that one reporting error or missed alert will damage the score they worked years to build. Playing the game perfectly does not grant you financial freedom. It simply earns you a more comfortable, padded cell within the algorithmic panopticon. The most disturbing part of the system is how casually we accept it. We download the apps, obsess over the alerts, and celebrate small increases in a number we did not choose and cannot fully see. We never explicitly consented to this architecture. We simply accepted it as the gatekeeper for survival, allowing past hardships to dictate future opportunities. The system governs behavior. It trains us to view our own survival through the eyes of a lender, turning every choice into a permanent record in a game where the cost of losing follows you for years.